I'm with Nick Miller, co-founder and managing partner of Fortitude Investment Partners. First of all, Nick, thank you very much for being a part of the Inside Network's Alternatives Symposium.
No, thanks, James. It's great to be here.
Great pleasure to have you. Nick, why is the Australian mid-market private equity space so compelling to Fortitude? What unique opportunities does it offer compared to the broader market?
Yeah, James, we actually operate in the lower end of the mid-market, so it's a lower mid-market, typically sub $200 million enterprise value, sub $50 million checks. And there's a couple of reasons why we focus in that area, one of which is if you look back in history over the last 25 years of data and private equity returns in Australia, check sizes of $0 to $50 million have significantly outperformed check sizes of $50 million and above. And the key reason for that is simply supply-demand. We operate in a more inefficient part of the market that then generates significant alpha for our investors as well. And the key reasons for that is there's a significant number of opportunities and not a lot of capital chasing after those opportunities. From a portfolio management perspective, you can significantly grow businesses by stacking the deck in your favour and hiring high-quality talent and managers to help accelerate growth in portfolio companies. And there's a lot of exit opportunities for our portfolio companies as well.
Nick, you spoke in your presentation about riches in the niches. Can you unpack what that means in terms of a successful investment strategy?
Yeah, no, apart from the poor English in terms of the alliteration or the riches of the niches, it simply means that we like to invest in and play in markets that are inefficient, and those markets are typically in niche areas. So areas where there is less competition. Competition typically, it restricts margin expansion, it reduces the amount of return on capital that you can get. So you can find nice niche businesses that have strong tailwinds coming in behind them, good competitive advantage and strong people running them, then you can typically generate sustainable outsized returns.
You're known for your focus on successful exits. What's the secret to achieving value creation through the exit strategy? And can you share a particularly memorable example of that?
Yeah, I think in terms of a secret, I don't think there's a lot of secret sauce behind it. I think it starts from the beginning in terms of identifying and investing in a high-quality asset that people will want to buy. And so, the quality of what you're investing in really does help when you go to exit. And then it's making it available and, making people understand that it is available. And so typically when we make an investment, within the first couple of weeks, we'll make a few phone calls to the key strategic or potential buyers and just let them know that we're planning on investing in behind and building the business and that, in a few years it should be on their strategic radar to buy it. And that just puts it, on their radar to potentially acquire it into the future. But then thirdly, it's about, in our part of the market, having wider exit windows. A lot of our businesses, when you're exiting at a $200, $300, $400 million enterprise value, it's not transformational acquisitions or M&A for the large strategic buyers. They can acquire that without the need for a transformational acquisition or board that's supportive of that, or kind of debt markets that are highly supportive as well. And then there's the mid-market and the larger market private equity firms that are generally pretty interested in our portfolio as well.
The mid-market is a pretty diverse and fragmented space, and the lower mid-market would be even more so. We're not talking about household name companies. So what challenges do you face in identifying businesses there before, and then the challenges of investing in them, and how do you overcome those inherent challenges?
Yeah, with 70,000 businesses in the Australian economy that sit within that, $3 to $15 million EBITDA. There's obviously a lot of shoe leather that's required to go and try and map the market and, build a pipeline. Over the last 10 years of working together, we've interacted with 18,000 businesses. Of those 18,000, there's been 3,000 opportunities to deploy capital. And of those 3,000 opportunities to deploy capital, we've invested in 17 businesses. It is a very strong systematic approach. It's a requirement to only focus your time and efforts on those most high quality opportunities. And it's really kind of having a strong team behind you that can, identify those and really kind of, run to ground the opportunities when they come up, the high quality ones.
Nick, we're closing the Alternatives Symposium with a workshop that explores the institutional approach to alternatives, and instos have obviously been earlier adopters and have gone into it to a far greater extent than the other markets, but the wealth space is looking at it. So what guidance would you have for advisors who are seeking to replicate the approach and the allocations that the institutions have followed in their private wealth space?
Yeah, we've always had a really strong wholesale and advisor following within our firm, and so for me, it's really understanding and mapping the market. I think within private equity, all managers aren't the same, but there's also ways to improve your alpha compared to the general market by finding the pockets of value. And for me, I do think the lower mid market is an area that people should at least consider as part of their portfolio for their clients going forward. And the other added advantage is the large institutional investors, the large super funds, because they've got so much capital to deploy, their main focus is in the mid or the high and the bulge bracket private equity firms. And so for advisors and their clients, actually being able to invest in the small market where you can generate significant alpha compared to the larger private equity firms is something that is relatively attractive and gives them a competitive advantage to building alpha within their own portfolios.
Nick Miller from Fortitude Investment Partners, thanks very much for participating and for your time today.
No, thanks, James. Appreciate it.
It's been a pleasure.
Cheers.